Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Following a 3-day rally, we can see that the Australian dollar hit the brakes at 66.30, aligned with the 60-day simple moving average and posts a gravestone doji. From there, we've seen some weakness coming into the Monday session. Nevertheless, the market is not overly bearish, so therefore we should continue to find support around this area of 65.45 to 65. And I feel that the market may potentially head higher once we get out of this situation of the bear case and then look on towards 67 cents. The base, I do feel, should continue to hold at 65.45. Turning to the euro, the market was a little bit whipsawed overnight, but still holding above the level of 108.70. Looking ahead, all eyes turn to the February US CPI figures, which will heavily influence expectations for a Fed rate cut. Forecasts hold at 0.4% of an increase in CPI month on month and a 3.1% rise annually, with the core CPI, excluding volatile food and energy prices, is expected to rise by 0.3% monthly and 3.7% annually. This data will provide insights into potential rate cut by the US Federal Reserve in the coming months. Traders are eyeing June as a probable time for rate cuts, though some speculate that cuts will occur as early as May. It is a key number, so do keep an eye on it later today. While the support level holds at 108.70, I feel the market should eventually move on towards a target of 110 figure 15 or 110.65 outlined here and reassess there. Due to the volatility, traders should continue to adapt their strategies based on their risk management principles and adjust accordingly. The dollar yen resumes back to a bearish case after a brief bounce in front of the level of 146.35.45. Keep an eye on this level as a break of 146.35 would open the way down towards the region of 145.25. The trend is still relatively strong, although we're a little bit oversold and getting close to extreme, but overall the bears are still weighing on the market. Any upside attempts should be limited with 147.30.50 seen as a short-term cap. Sterling stays a slight pullback overnight as all eyes look towards the UK's labour figures. The ILO unemployment rate for the quarterly ending in January is anticipated to remain stable at 3.8%, while the average earnings, including bonuses for the same period, are projected to decline to 5.7% from the previous of 5.8%. Looking at the technicals, although the topside call holds at 129.25.35, the pullback may give opportunity for the bulls to re-establish or find traders re-establishing their positions around the level of 127.20.50 area. Expect a bounce and reassess the top side, and as mentioned, traders should continue to remain vigilant, reassessing their positions at key levels and adjusting their strategies accordingly. Viewing gold, the market is still extremely overbought, and as we can see here, still pushing on towards the top side area around 2,200. I still find the ADX is extremely overheating, and with an overbought condition, no strategy is seen to the top side, but more to the fact a significant downturn may be coming very soon, and therefore look towards the region of 2,158 to 62 and reassess. Wrapping up with oil, the market found support close to the level of $76 a barrel, and from there staged a modest rebound, close to a hammer. In light of the pattern, and while intact at $76, we could see another test on towards that 78.10.30, and above there towards 79.35 to 65. Beyond there, the inverse head and shoulders still holds a target of $81 to $83 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out the intraday report, and I hope you enjoy the great start to the day.